Hello, everybody. All right, hi, everybody. Welcome to the next in a series of webinars that we are hosting on the digital asset maturity model that we publish. And this is level 3, unlocking the potential of digital assets. So very excited. We'll give everyone a few minutes to join. So I like to give everyone, 1 or 2 minutes because you know what? Life is this constant, nonstop meeting, never-ending set of Zoom meetings that go on and on and on. So, if you're 1 minute late, I guess we're going to call it okay. But this should be really fun today. We're going to go over 2 things. One would be we're going to talk about the maturity model and the level 3 that we really see. And then we're also going to spend time talking about some of the stuff that's in the news. So you guys get to get a little bit of the Bitwave Pat White hot takes on some of the things that are happening in the news today. So in particular, the executive order, the Ukrainian aid, things like that, which are quite impactful in many ways to crypto. So I think it'll be really interesting to I just want to spend a few minutes. I want to spend a few minutes talking about it because it is a really interesting day. So we'll give everyone, actually we're at 10:33 right now, so we will get into it. Hello, everyone. My name is Pat White. I am the CEO of Bitwave. Today we are presenting the third in a total series of 4 webinars. We might do more. It's like that the Hitchhiker's Guide to the Galaxy trilogy. There was like 5 books, so we might have 4 or 5 or maybe even a few more. But the goal is that over the last few months we've been periodically doing these webinars that talk about we as Bitwave published a white paper, position piece, thought piece called the Digital Asset Maturity Model, and it is a piece for businesses that are using digital assets on the different stages that you as a company go through for digital assets. And so, stage 1, we'll do a little catch up on the stages as we get into it, but it's all about what are the different kind of milestones that you as a business, you as an operations team, you as a finance team want to accomplish as you are moving from kind of beginners of digital assets to the final stage. Now, the one thing I always like to talk about with that is that the digital asset maturity model is a funny model in some ways, that a lot of our customers come in at they come in at the very end and then need to kind of work backwards down the maturity model, or they come in at the very beginning and work upwards. But it's a really fun thing, so we'll get into it here. So, all right, let's get rolling here today. We'll be talking about digital assets, the digital asset maturity model. Oh, excuse me. Oh, God. Digital assets. So we're going to start with a little bit of news, what's happening in the news, just to catch everyone up because it's kind of fun. And it's really interesting week in crypto news, which I guess every week is an interesting week in crypto news, but this is a really interesting week in crypto news. So we're going to do a little bit of the coverage of that. Then we'll talk about the digital asset maturity model level 3, what we're expecting there, and that sort of will take over the second half of the webinar here. It is always worth me mentioning here on June 9th in Austin, Texas. So the day before Consensus officially starts, we are hosting a digital asset summit. So the Enterprise Digital Asset Summit. It is for people. If you're on this webinar, then I can almost guarantee that you would enjoy being at this. It is a chance for people who are operators, the business people, the finance people, the tax people, the accounting people who are working with digital assets on a day-to-day basis to get together, share best practices, learn about new business models. We have a futurist named Ray Wong coming who will be talking all about, the metaverse is maybe getting a little long in the tooth in terms of a name, but it is still a very important theory here, which is that our lives are becoming more and more online, and digital assets are going to play a critical role in that. We'll probably add, given the executive order came out, we'll probably add some government stuff. So we'll see about what we can add there. So info at bitwave.io if you'd like a discount code for that. Very much looking forward to everyone being there. It should be a lot of fun. Other places you're going to see Bitwave in the next few months. We're going to be at GDC next week, so the Game Developer Conference in San Francisco. So if you are a game developer, or if you are getting into NFTs or anything like that, or if you're just in San Francisco, come swing by. It'll be a really fun time. First conference I've been to in a while. Gosh, I don't know if I'm fully ready or not, but I guess so. I guess you can't stop the inevitable march back. I'll be speaking at the DeFi retreat. So this is a boat trip coming out of the San Diego harbor May 3rd. And I will be hosting a panel first thing in the morning, talking about the current state of affairs for enterprise digital assets. So this is a passion of mine, is how our business is adopting digital assets. We'll be there. And then CryptoCon is coming in. I believe it is in, don't have the dates there, but if you're going to be out there, it's in Miami. And Amy, my co-founder, will be speaking at that. And that should be really, really fun. So bitwave.io/events for all of that stuff. If you're not familiar with Bitwave, I won't spend a lot of time, but Bitwave is the leading digital asset tax and accounting solution for businesses that are using cryptocurrency. We work with over 100 customers at this point. We got to update this slide, many of which now are public and GAAP. And we're going to do, one of the webinars we're going to do here pretty quick is we're going to do a whole webinar all about impairment, speaking of GAAP companies. So I think that'll be next month, probably. We're going to do a whole impairment webinar, talk about the different challenges, the issues that come up. Had a fascinating meeting yesterday all about impairing loans, lent assets or borrowed assets. I mean, really, really crazy stuff you have to deal with in this world. So this is Bitwave at a glance. If you need digital asset tax accounting, back office solutions, AR, AP, DeFi, we've got a thing for you, bitwave.io. And then the last bit of housekeeping, and then I promise we'll get into the content, is we have, if you are curious about any of our webinars, we have a bunch of webinars on demand. So it's YouTube/Bitwave, I believe, or just search for Bitwave. And we have lots of things. Smash that subscribe button on Bitwave. All right, so we like to always ask a poll, and then we're not just asking these for fun. We actually, I swear to God, we're going to be holding, like, next year at the beginning of the year, we're going to do a roundup of our poll data to share with everybody. We've already been gathering really, really interesting data over these polls. So the question is your company planning to acquire digital assets? So if you work for a company, if you work for a business, are they planning to acquire any digital assets and hold on the balance sheet? I think this is all in light of, a lot of government movement around this that is legitimizing in some ways. I mean, we'll talk about the Biden executive order, but we'll also talk about Colorado moving to accept digital assets as tax payments. This is all very, very good news and just sort of legitimizes it. So, all right, 30 more, or like 5 more seconds to answer. All right, let's close the poll. What do we got here? All right. Seems like not a ton of people are going to be buying digital assets. So it's going to be okay. So not many of the companies are planning on buying digital assets, but that's okay. Well, I think that'll start to change here pretty quickly. It was less than 30% were planning on acquiring digital assets. So hopefully that'll change here. All right, so let's do a quick roundup of the news. I know this is kind of a funny thing for a webinar, but it was just it was such a newsworthy month that couple of weeks here that I thought it was worth it. And in particular, the Biden executive order was a really, really big one to talk about. So for people who didn't get a chance to see it, Biden signed an executive order that basically instructed. Now, it didn't lay down any laws. It didn't add any regulatory clarity. But what it did is it instructed the various branches of government to make concrete moves towards clarifying the regulatory stance of the US government towards digital assets. Hopefully that means centralizing like the way I tend to read that is one of the biggest issues with digital assets in the US right now tends to be around it's like the regulatory gray area. When you have a bunch of different branches of government that all have some amount of say over a particular area of law. Drugs kind of fall into this also, where you have like law enforcement, you have ICE, you have the FDA, all kind of have a say in drugs, and you have Congress. Crypto falls into this, where you have the IRS, you have the SEC, you have the FTC, you have a few other kind of like the Consumer Credit Bureau. All these different bureaus in the US, and branches, all tend to have some amount of say on digital assets. And the worst case scenario for consumers, for basically for the us who live in the US and use digital assets, the worst case scenario is sort of a peanut buttered gray area around regulation, where you're never clear if it is the FTC or the SEC or the IRS that is really making the rules that you need to follow. or if it's a non-governmental agency like FASB or AICPA, who are making the accounting rules, obviously, but that are then making accounting rules that are in tension with IRS rules and whose do you follow and all that kind of stuff. So the directive was basically to do a couple things. One is it directed them to come to some sort of regulatory clarity, start publishing papers, and it also directed the Treasury to seriously look at a central bank digital currency. I was asked, we sort of did a lot of commentary on this on blogs and things like that and news articles. And the one thing that everyone asked me was like, is this the final death knell of, is this the final death knell for Tether? Which I love that this is like every major cryptocurrency news item that happens. The question that comes up is this the final death knell for Tether? No, I don't think it is. But more to the point, like any movement the US is going to make here is going to be five years out. The example I gave is that it took, something like 10 to 15 years for them to do the Harriet Tubman 20 that then just got torpedoed at the last minute. The Treasury Department in particular is a incredibly slow moving organization for very, very good reason. Like it should be. It is a source of U.S. hegemonic, power is our dollar. So we should be moving slow. So don't worry about the CBDC from the US for the next few years. Even beyond that, there's like hard questions about like what it would take to, if they did a CBDC, are they going to do it on Ethereum? If they don't do it on Ethereum, then it makes no difference. Like if you can't go and stake it or borrow against it or whatever, like something, they're just doing something fun for banks to kind of play around with. So really good news that the government's getting into this, really great stuff from that side. But I wouldn't say, I don't think it actually impacts any of us day in, day out today, but it is good. So the last thing we'll talk about here is the Ukraine. We won't spend time talking about the geopolitics of Ukraine, but over $100 million of crypto got moved to Ukraine, got donated to the Ukraine over the last month, over the last like 3 weeks. And I think this is one of those things that, when we talk about the digital asset maturity model, I'm going to tie this back to it. What I tend to talk about is the second stage of the maturity model is all about, and we went over this before, but it's all about kind of taking your current business processes and adapting them into the digital asset world. So like, what are our current business processes, like sending wires, sending bills, all of that kind of stuff? How do we adapt that into the digital asset world? So, this is a not bad example about that because, literally it is non-trivial to get $100 million worth of donations in about 2 weeks from all four corners of the world. That's incredible. Like, I don't know what to say. I mean, like, if that's not sort of a sign of the times, like normally you would have, and basically Ukraine got 100% of that. I mean, that's the thing that's almost really incredible is like, there's ways to set up funding pages, but like, you do Kickstarter that would only be in the US, you do different types of like things would only be in different countries. Like it is not a great, it is not easy to do a worldwide donation campaign. Crypto enabled it. Basically from all over the world, people were able to send everything from ETH to USDC to CryptoPunk. So someone actually donated a 230K CryptoPunk to Ukraine, which they then went and sold and used to buy bulletproof vests. So when you think about the maturity model, like this isn't meant to make light of Ukraine, obviously, or anything like that. It's meant to show that even thinking about current processes, crypto is incredibly powerful. Like this idea that you can basically take money from all over the world with one click is incredibly powerful. And that's what we saw happen in Ukraine. Now, the flip side of this, of course, was that there's been a couple of articles. Apparently, there was an article that a Russian oligarch tried to sell 125,000 Bitcoin through a dark market in Dubai. So obviously, like, there's ways that people are kind of using both of these. But I will say the fact that news got out shows that, like, we haven't heard about oligarchs selling their art, which they're doing. There's all these other ways that people are kind of like, hiding their assets and things like that. The fact that this got out actually shows that crypto continues to be a actually relatively transparent mechanism for a lot of this stuff. So anyways, that is it on our side. On the gaming side, we won't spend a lot of time on this, but Axie Infinity, $4 billion NFT sales. I mean, gaming for crypto NFT gaming is going nuts. it continues to be a bit overlooked by the gaming industry in overall. But I'll tell you, if Call of Duty, the newest one that they just released, that like massively underperformed, if they'd done $4 billion in sales, boy, would they have been happy. And so it just shows like how the industry is kind of changing, and they need to get into it. So, all right, let's get into the meat and potatoes of this particular call here. Very, very excited to get into this. Okay, so we're going to talk about organization readiness for digital assets. What we already covered from the previous presentations were these first two. So adopt, expand, and then unlock. And that's how we tend to think about this, is like the adopt phase is noted by your CTO just went and bought a bunch of crypto, and you need to figure out what the heck you're going to do about it. Like you need to deal with digital assets, you need to deal with the accounting, the tax, all of those pieces on top of it. And so that is getting some software like Bitwave or whatever. I know it's self-serving, but it's getting some software like Bitwave set up. It's getting some simple processes. Like, when you have one person who has digital asset in your company, it is very, very different than when you have 100 people, is then very, very different when you now have whole business processes that are depending on it. So that's what we're seeing. In the adopt and the expand phases are all about learning to scale crypto. Because one of the things about crypto that you have to understand is that crypto is unlike other financial rails in the sheer volume that you are going to be immediately responsible for dealing with. It's one of those things that people don't always realize, that it is very, very easy with crypto to go from one transaction to 100 transactions to 1 million transactions. And it's one of those funny things. A lot of the companies that we deal with are not like, you're dealing with a 9 or 18-month-old company doing 10 million transactions a year. 10 million revenue events a year is in line with, a mid-sized retailer in the US. That's crazy to go in 18 months to go from an idea in someone's head to the size of a mid-sized retailer. But the problem is, of course, the crypto companies, like you don't go through the growing pains. You don't go through hiring accountants and CFOs and all this stuff. Like what ends up happening is by the time you're doing 1 million transactions, you're already late on your taxes and having to deal with it. So a lot of the maturity model is, the goal for us always is to teach people, to help them start scaling early, to start building the muscle memory early, so that when they actually hit the stage that we're going to be talking about today, which is the unlock stage, they are ready for it. You already know how to account for it. You've already made decisions about what is taxable, what isn't taxable, what is, how are you doing treatment? Are you impairing? What impairment methodology are you using? You've already made all those decisions. You've already started to scale it. You already have software. And now you get to get into the really fun stuff around new business models and things like that on top of this. Then the last webinar that we'll do next month probably is all going to be about DeFi. So this is the most exciting. This is all going to be about enterprise DeFi, because it's the same, like, once you've adopted, once you've started to expand your usage, and once you have new business models, well, now suddenly you're sitting on this stockpile of digital assets that you need to put to work. So how do you put it to work? That'll be our last one, all about DeFi. So let's get into it. So last month that we did this webinar, we would have covered a few things. First of all, you want to have already set up a digital asset training across your organization. So I like to think of this in terms of like a tiger team with some training for anyone who will be touching digital assets. In the same way that you do training for corporate cards and sexual harassment, all these other things, digital assets are very similar to that. Like, it is a space that not everyone's aware of. There is the chance for a lot of money to disappear or like to lose a lot of money as a company. So you want to set up training. You want to have weekly or monthly or like whatever quarterly training for people that will be touching digital assets. You want to go into operational security around private keys, accounting treatments, the record keeping, all of that sort of stuff. So that's a really important part of level 2, is getting training, like getting tiger teams set up that include your tax and accounting people, and then getting training set up. The other piece, which you'll hear us talk about a lot, is wallet hygiene. So at level 1, the common tendency is that everyone in an organization there's like 1 or 2 wallets in the organization, and all of your crypto activity happens out of those 1 or 2 wallets. That is essentially an untenable position for a company to have maintainable digital asset tax and accounting. The problem is that with traditional bank, you get a really nice memo line when someone goes to Bob's Burgers and spends some money. So it's really easy to say, oh, $10 at Bob's Burgers. That was probably either an employee meal or a travel meal, depending on what city it was in. You don't get that in crypto, right? You might have visibility into the from or the to, like who you interacted with, what smart contract you interacted with, but it's not telling you this was a burger company or anything like that. So one of the ways you deal with that is essentially segregating out your wallets by purpose. So having revenue wallets, having expense wallets, having investor wallets. Like that's the way we do it at Bitwave. We have AR wallets, we have investor wallets, we have expense wallets that we use. And we are very, very diligent to keep those segmented so that when you go and actually do the bookkeeping for Bitwave at the end of the month, or on our crypto side, it is really easy to say, oh, there's a bunch of money coming out of this one right here, and it's going to a known address. Let me look at how we coded that. Yep, this is all great. That's an expense and it's easy to do. Oh, we're going to write a rule that every bit of revenue that comes into this wallet will automatically get categorized as revenue. So wallet hygiene is a really important part of level 2, and it will continue to be an important part because that also goes, once you get into DeFi, you want to segregate your DeFi wallets. You want to segregate your revenue, once you're into new business models, you want to segregate those business wallets, like all that kind of stuff. And then finally, of course, like the rules and the workflow. So the automation. At level 2, the volume is low enough that you can still get away with like kind of like janky automation, or like you're building your automation. By the time you get to level 3 and you're doing 10 million transactions a year, you cannot get away with janky automation. Like you have to have very, very, very solid. So the goal of level 2 is to kind of work through, get your automation figured out, learn your rules engines and get your workflow set up into your accounting system all automated here. All right. Oh my God, sorry. This is, I like to show this. I won't talk about it for too long, but I do like to show this, that this is the way that you should be presenting this to your organization as well, which is, I kind of like to think that there's a happy path. There's a middle way when it comes to digital assets, which is you want to be moving fast enough that you are taking advantage of this entirely new industry and how much is changing the world. Like right now, it's fair to say that the US is firmly up in this top left quadrant, right? Like the US is just pegged up there because the US government, because they're moving so slow that they're missing opportunities to be the innovator in the space. I mean, that's why Biden made that executive order, is that we're all scared about other companies innovating in the space faster than the US is. And as a financial superpower, like we need to be on the bleeding edge of finances. Down here, this is where you've done all this crazy stuff. You have a bunch of money sitting in DeFi protocols and all that kind of stuff, but you don't have any of the processes. So this is where you've exposed yourself to a ton of risk, but you haven't kind of built up the processes to get between there. So we like to say that, what you want to do is you want to walk a kind of linear line through this, where you're building up processes while you're engaging in kind of riskier events, like DeFi being kind of a risky event, new business models where it's hard to track revenue being a risky event. So this is the digital asset maturity model is all about helping you walk this kind of middle path here. And that's a lot of the guidance we're going to give today will be about this. So let's do another poll here. Where do you think you are in the digital asset maturity model? And I'll go back to this slide here to show it. So are you at the place where you just barely have maybe picked up a little bit of crypto? Are you at the place where you're starting to scale your internal crypto processes? Like you actually have software, you have tooling, you built it. Are you at the point where you're starting to have your business is shifting so that you actually have business models that are dependent on crypto and you're now seen as a major source of your business and revenue? Or have you gotten through all of that and you're like, you're in DeFi, you're doing everything around crypto, you are a fully matured organization? We don't really have the way to capture, if you're going the reverse down this, is that you YOLO'd into a bunch of DeFi and now you're trying to build processes. But if that's the case, you probably could just put 1 on there. It's the goal here is to sort of figure out where you are in terms of your internal business processes. All right. All right, so great. So, okay, so the way it breaks down is about 35% said level 1, 20% said level 2, 20% said level 3, and 25% said level 4. So that's great. I mean, I think that shows that the model does line up well with kind of how people are doing it. It does show that a lot of people are in the early stages of that. So hopefully this will still be valuable for you, but really early stages, the things to remember, go watch our video we did all about the level 1 digital asset maturity model. Second, go and think deeply on your wallet hygiene and picking software to kind of help with this. That's the most important part of that level one model there. So, all righty, great. So let's get into this level 3 that we're talking about today. Okay, so the high level here is a couple of things. You've moved to a model where you have lots of wallets and private keys. So here's something that I talk about a lot, and it's at this level 2 to level 3 phase that you'll start to see this. And this isn't meant to be mean to like the custodians out there, because we love the custodians. We work with a lot of them. They're really good folks, really good businesses. But at the end of the day, when I think about crypto, I don't get on a high horse about tearing down the government. I don't get on a high horse even about tearing down the traditional financial systems. I get on my white horse about this idea that the current financial system in America basically imposes this tax on everybody. And the best way to think about this is like the example I always use, is the prime rates in America right now for interest that banks pay to the US government is 1%. But if I were to go and try to take a loan out from Citibank, I would pay 6%. Like there's a 5% gap between where the banks are and where the US government prime rate is. And there's a lot of different reasons for that. I mean, obviously someone has to make money. So there's this aspect where you have a little bit of a spread to make money. But there's like 4% there that is in, mainframe computers that Citibank still operates. It's 6,000 branches across the US. It's all the people that kind of work for it. It's the hedge risk that they're picking up to kind of like underwrite your loan. There is this money that is being kind of used that is above it. It's fat in the system. And so digital assets to me are all about how do you cut the fat out of these systems. And so one of the things that we tend to talk about is the more mature that you get along this digital asset maturity model, the less likely you are to actually use a traditional broker, a traditional custodian, because what you end up doing is you end up going from paying Bank of America or whatever 1.5% to 3% to paying your custodian 1.5% to 3%. So one of the voyages that you're going to take along this digital asset maturity model is that you're going to bring in more and more of your digital assets to be in-house. And there's a lot of ways to do this efficient. There's a lot of ways to do this without risking everything. I mean, there's, at a high level, businesses already manage a lot of private keys. Businesses of a certain site already manage private keys for VPNs, private keys for SSL certificates, private keys for signing stuff that they publish into their ERP systems. Businesses tend to be good at managing private keys. What you're going to start to see at this level is you're going to start to see more things that are internal. You're going to start to see Gnosis vaults. So instead of having a custodian, you'll have a Gnosis vault that 4 or 5 people in your organization have access to, and that has particular levels of multi-sig rules. So you're going to see more and more stuff start to come back in-house. You're going to start to see more and more stuff potentially come back in-house. And at this point, you have to start thinking about the control processes around that. When everything's being managed through a custodian, that's fine. It feels like a bank account. Like your custodian's taking on a lot of risk. You probably have insurance. There's all these other things that go along with it. As more and more stuff comes in-house, especially because you just want those savings. Like if you're making $10 million a month in Ethereum, it's really tough to give, and that you're not paying any fees on that. It's just hitting a wallet. Really tough to give a big chunk of that over to your custodian. So you're going to start to see more and more people holding their own keys. And so you as the treasury, you as the controller, you as the finance group need to start thinking about this key management in the way you never have. Traditionally, it'd be the CIO and the CISO are people that worry about key management. And so this is yet another example where you as a business, one of the trends for crypto is that it brings together people that otherwise wouldn't talk on a day-to-day basis. Tax and accounting, it's not that they hate each other. It's just they don't necessarily talk on a day-to-day basis. Crypto brings them together. It forces you to be closer. It forces the accounting team to be closer to the tax team. This is that same case where now your finance team is going to have to learn a lot more about information security, and it's going to bring your finance team closer to your CIO team, your IT department, because you are now having to think about, what happens if someone who has a developer wallet, a MetaMask sitting on their laptop, what happens if they lose their laptop? How do we sweep funds away from that wallet? How do we secure the funds that are sitting on there? Even if you're still using a custodian for the majority of your digital assets, you still need to be thinking about this. So at this level, like, start being aware that you have material exposure to what would otherwise be IT types of incidents. You have material exposure through someone losing a laptop, someone getting hacked, like if someone's laptop gets hacked. All of those things create material exposure to your digital assets. And now the finance team is picking up a responsibility to work with the CIO to think about how to protect yourself. Because that's just not something like, when did the finance team have to work with the CIO to think about how to back up laptops? Like, that's just not something that ever happened before. But suddenly you as the controller, you as a treasury, absolutely are responsible for the digital assets in your organization. And if you're not working with your IT group to set up, like, sane and considerate, thoughtful processes for backups and centralizing keys and getting a central spot with your MetaMask seed phrases, which is something that we tend to recommend, that once you get to a certain level, you do work with your IT group to set up a vault where you can have a kind of secure storage of your company seed phrases. I know it might sound kind of intuitive, but these are controls that you have to put in place to kind of do it. So that's the first thing. Like, this is really important. You're gonna start to see a lot more wallets and private keys in-house at this level. You're gonna start to see vendors and employees transacting in crypto. This is getting back to that Ukraine thing. Like, it's just so freaking easy that, the difference between doing an international wire. I don't know if you guys all watched the new Netflix show, Inventing Anna. It was all about the scammer. And like, every time she would say it, she would always talk about how, like, my bank's having trouble with international wires, and everyone believed her. And like, yes, she was a good scammer, and yes, she was a con artist. But at the end of the day, like, it's not wrong. Like, doing international wires is hard. I get nervous doing them. I get way more nervous sending an international wire than I ever get sending a crypto transaction. And more to the point, I mean, there's so many benefits. Like, there's, with Anna's, that's a great example where, like, she could always be like, oh, the wire's coming through. Oh, they sent it. Oh, the bank's taking it. Like, with crypto, you don't have that. Like, either you have a transaction hash and I can send you the Etherscan link that shows where I sent the money, or you don't. Like, this whole notion of the checks in the mail starts to drastically change with digital assets. And so we already are seeing more and more companies like Bitwave. We accept crypto for payment. We see more and more companies that are basically that are moving to this to get T0 settlement, and to kind of remove this aspect of, like, oh, I wired it. Oh, it's in the mail. Oh, I did it through bill.com and they're taking a long time. Like, no. It's either on chain or it's not. Like, there's nothing kind of be said there. And that goes both directions. Now, there's cool stuff that's happening there beyond just this. And this is what I want to talk about a little bit, is that, you probably even adopted some of these business processes earlier on in level 2, paying some invoices or getting paid, or maybe even doing some payroll. At level 3, you can start looking at new ways to do this. So one of the things we talk about a lot at Bitwave is streaming payroll. Streaming payroll is this idea, to sort of step back slightly, everything that I just described, this idea of replacing a wire with a more immediate money movement is great, but it's all it's very evolutionary, right? It's very like the next step of financial systems evolution is T0 settlement that happens on chain, like easy visibility. The revolutionary piece of this is that when you have programmable money, you can do things like have programmable money. So instead of paying out your vendors on a monthly basis, you can set up draw accounts. You can set these streaming invoice accounts where basically, as long as you're using their services, they can draw money off of it. And then at some point you can flip a switch that cancels it, and then they can no longer draw money. But it's not this like point in time, I'm going to pay this all at one point. It's more of this like kind of continuous movement of money between you and your vendors and your customers, and you and your employees, all this really, really cool stuff there. And so that all requires new methodologies for accounting, obviously. Like, the way we tend to do it is we tend to treat it like a draw, where you basically draw the funds against like you would like a salesman's commission, and then settle it, clear it at the end of the month. But there's a lot of ways to do it. And it's fair to say that unless you've built your muscle memory, unless you kind of built up your legs over the previous, couple of months, or I mean, over the couple of levels that we kind of define here, you're going to be in a really tough position to suddenly like jump in and start taking something crazy like streaming payroll. So you want to build your muscle memory, build those muscles to how you do tax and accounting, so that when you get to something like streaming payroll, you're not having a freak out moment. You're saying like, okay, what are the other things that we could kind of compare this to that this sort of feels like in our world? And that also goes with the significant revenue. So at level 3 is where new business models have come into play, and you're seeing revenue from these. So let's take, the NFT marketplaces out there as a prime example. This is a business model that didn't really exist a couple of years ago. It kind of did. I mean, don't get me wrong. Like there were certainly marketplaces like eBay, but this idea of like a near peer-to-peer market with very, very low oversight, and where you as the customer, you as the company, the marketplace operator, aren't paying fees. Like this is crazy. Like this idea that you create a marketplace and other people pay your credit card fees and you just get money deposited for being kind of the platform is, is it totally new business model? Like not totally new, but pretty close. So this is really exciting stuff. And we're seeing this all over the place. And again, it's that step where like you need to have your muscle memory built up so that when you get to a month that you have 100,000 transactions in, you are able to deal with that, right? Like you don't want to be dealing with that the first time you've ever done crypto. You suddenly have 100,000 transactions. You want to know exactly how you're dealing with it so that you can make intelligent decisions about, okay, we're going to roll this up on an hourly basis or a daily basis. Here's our pricing methodology. Here's what we write so our auditors can view this, all that kind of stuff there. So all really good stuff here. And these are the opportunities that we tend to think about. It is more internal fund, more internal wallets, because you're going to basically save a lot of money or make a lot more money yourself. A lot of stuff happening in crypto between your vendors, your employees, your customers, your, everybody like that. And then new revenue streams from these pieces here. Okay, so here are the roadblocks you're going to kind of run into. So first of all is, of course, that there are going to be more knowledge gaps. So something like streaming payroll, streaming payments, revenue, rolling up revenue. A lot of companies just don't deal with this. Like it is not normal to have to, like most companies don't have RevRec tools until you get to a pretty big size. But at this point, you're going to have to do that. So there's always a knowledge gap around how you're doing this on the revenue side. On the private key side, it's also the same thing. Like you're going to start to get more and more people working for your company that are not necessarily crypto true believers. Like this happened for Bitwave. Like we hired someone who during the interview who's like, crypto is pretty cool, but I don't know if I fully believe in it yet. And that's just the nature of hiring. Like at some point, like you've hired all the hardcore crypto people of the world, and you're just hiring engineers, or you're hiring like, on the finance side, you're just hiring accountants who don't necessarily know about this, but have to understand it. So you really need at this point to start building protocols as an organization. So this is where you're now working with your IT department to build protocols for how to back up private keys. And I know that's insane, but it is a joint effort with the finance group. It's like one of the very, very first joint efforts between the finance team and the IT team to basically figure out how you're going to protect, potentially millions of dollars sitting on either pieces of plastic or computers around the company. And so, you want to engage with your IT team. The finance team, the treasury department should be the one dictating the risk assessment here, right? The IT team might not know that you have $1 million sitting on someone's laptop. The finance team has to be the ones that sort of say, look, here is our risk exposure. We have this much money sitting on laptops and on treasures and ledgers that individuals control. We need to make sure like this is the exposure to the company. Help us, dear Mr. IT person, help us design a exposure appropriate mechanism to secure the money. So if you have, it's obviously different. If you have $10,000 sitting on developer wallets, that's one thing, versus if you have $10 million sitting across developer wallets or smart contracts, that's another thing. So, working with the IT department to build up these protocols and things like that. Starting to build muscle memory around smart contracts. So this is one of those things where up to this point, you probably, if not, you might never have deployed a smart contract. You might not have even thought about it. At the level 3 is where you really start doing more things. Like you take one of the NFT marketplaces, they all have to deploy smart contracts for their operations. And unfortunately, like fortunately or unfortunately, like you can't fully depend on your engineers for this. So you have to be training your engineers on how to do this. You have to make sure that they are competent. You as again, there is this aspect where the finance group, like what would traditionally be the controller or the CFO, is doing a risk analysis on something that you would not normally do a risk analysis on. So let me give you a really good example. Would be, one of those smart contract platforms. Engineering is going to lead the project. Engineering is going to do all the work. Engineering is going to operate it. But at the end of the day, if there's a bug, and someone someone loses an NFT, that hits the finance team. It is a risk assessment that the finance team has to understand. So it is not like, one of the recommendations I tend to make is, it is not enough to, as the finance team or as your operations team, as the back office team, you don't fully get to wash your hands of this kind of operational information just because your engineering team is working on it. So some examples of things to start thinking about at this level as your finance team. The finance team should be mandating smart contract reviews from reputable smart contract reviewing shops. So there are audit shops that do nothing but audit smart contracts all day long. In the same way that the CFO's group would be responsible for kind of understanding other types of controls, like making sure that your IT controls line up with industry best practices. When you have a smart contract out there, when you're starting to deploy them, when your engineers are doing work around them, you suddenly, as the finance team, are assuming the risk and liability of that smart contract. So you should be mandating controls. Very common controls would be audits by audit companies that specialize in auditing smart contracts. You might even want to hire, we've seen a couple of finance teams that hire smart contract developers to do their own audits. So something that could be kind of independent of the rest of the engineering team. It's hard to hire, don't get me wrong, but I mean, that's, if you're about to launch a $100 million marketplace, like that is real liability. And the fact with crypto is that you do not have some of the escape valves that you would have as eBay launching their marketplace, right? eBay and their marketplace has a lot of escape valves to protect against fraud and hacks that you as a company, as a blockchain company, might not have. So you have to set up controls around how that's happening. So other controls to set up that might, and I know I apologize for potentially going kind of deep on this, but I like to point out, like, there's a unknown problem here for most ops and finance teams, that you are not normally in a position to mandate how your developers manage code. One of the easiest attacks on smart contracts is for one of your developers, like it's the office space attack, right? Smart contracts are really when you can start to see that office space attack, which is, where they make a very small code change and a very small amount of revenue, siphons into a different account, or it siphons into a sub account on the smart contract that then someone can go and poke and sweep all the funds away when they're ready to run away to Aruba. Like, there are all these ways that a malicious developer could introduce a backdoor into a smart contract to basically defraud the company. I mean, obviously it's engineering's job to not have that happen, but it's the finance team's ultimate responsibility. Like, who would you ask when you had a fraud assessment? Who are you going to go and talk to? You're going to talk to the finance team. So the finance team has to be thinking about the processes for securing the smart contract code, the processes for deploying the smart contracts, the processes for monitoring the smart contracts for someone going and sweeping a bunch of funds away, or like extra money accumulating in the smart contract that shouldn't. So this is all this kind of stuff that, like, you, as part of step one here, you're going to be establishing relationships with your IT department. As part of step two, finance is going to be starting to establish relationships with your development org in a way that you probably never did before. I mean, it's a really crazy thing to say, but like, you want to be creating controls for how they're doing their smart contracts, and you want to be auditing them, because at the end of the day, engineering will be super screwed, but you guys, like the finance team, is the one who has to deal with the mess if there's a major hack, or if you lose someone's NFT or whatever it is. The other thing here is, and this is like step level 3 here is something I love. Different companies, like if you're coming from a crypto native company, a crypto native company is being built to be blockchain efficient, right? So like a crypto native company knows about these new business models, but not every big company does. If you're a finance person at Microsoft, Microsoft might not be thinking, the Xbox game studios might not be thinking about NFTs right now, or they might even have a real knee jerk against it, because a lot of gaming people have had a knee jerk reaction against NFTs. So they might not be aware of what's happening. This is value add. And so one of the ways that I tend to think about the role of the finance group in particular, but like all of the back office in a blockchain world, more and more operations are going to move from a typical outsource. Like more and more of the stuff that you as the finance team or you as the ops team would have outsourced to JP Morgan or Goldman Sachs or to your bank will start to come in-house. And so that means that as a finance team, you need to start building more expertise in-house around things like financial analysis for bonds. And like big companies will have it, smaller companies might not, because you might be able to issue your bonds directly on the blockchain. You might be issuing securities instead of doing an IPO, like you might do a public offering directly on the blockchain. So you're gonna have to bring more and more people into the finance team that actually have kind of analyst experience, like someone that you might steal from like Goldman to actually be your internal analyst. But at the same time, like you also want to start building up your knowledge of these blockchain businesses, so that one of the value adds that you can do is come out and say, hey guys, our current marketplace is really great, but if you look at it, we're paying on average 2% for fees. And did you know that OpenSea doesn't pay any fees in their marketplace? Could we look at moving between these two? I mean, there's like stuff like that that's like can the finance department take cost savings and new business opportunities and bring it out to the business to sort of tell them what to look at? Because it's one of those things. The thing about crypto is that different people have different knee-jerk reactions to it, and a lot of that comes down to like there's a lot of scams out there and stuff like that. But at the end of the day, the people who are looking at the bottom line are always in the best position to basically say, like, there's a new marketplace model where we could be earning 2% more. On $1 billion, 2% is real money. I don't know what to tell you. Like 2% of $1 billion is real money. Like, could we be earning more here? And that's something that you want the finance team and the company to kind of be very aggressive about picking up. And then the last thing here, which bleeds a little bit into stage 4. So this is kind of like what you want to get ready for stage 4, is you're going to want to start thinking about how to deploy your assets. At the point at which you are sitting on a lot of digital assets, you are making several different treasury decisions. You are, first of all, making treasury decisions about how much exposure you want to keep to digital assets. I know it's kind of a silly one, but like at the end of the day, you are making that decision. Like, do you want to have high exposure, low exposure? Let me give you a really, really good example. We have customers who make all of their money in Ethereum and pay all of their expenses in US dollars. That is a classic FP&A problem, because you are basically like, even as a crypto company, you probably want to have exposure. Like we certainly have exposure to Ethereum. I want to have exposure to Ethereum. I think it's a great asset. Like same with Bitcoin. We have exposure to Bitcoin. And I want to, as the CEO, my directive to our finance team is sit on as much crypto as we possibly can, because I think there's massive upside in crypto. But at the same time, you still got to pay your bills. You still got to pay your employees. So there's this FP&A aspect of like, how do we balance, the value of crypto over the next 10 years and how we think it's going to go up versus the need for cash on a day-to-day basis. For some companies where crypto is kind of a small part of their business, you can make a very strong argument. This is always my argument for when I talk to public companies. It is always my argument that you do not go and buy a bunch of crypto unless you want to. I'm okay with that too. But like, you're going to have a tough time getting your audit committee to be like, yes, let's go buy $1 million of crypto. You will have a much, much, much easier time convincing them to just sit on all the crypto that you make from your new business models. So don't necessarily go out and buy crypto, but don't sell your crypto the second you need it. That would be for businesses that tend to have a lot of cash flow. So if you have cash flow from other parts, like if you have USD cash flow and you don't need to be like, penny, very, pinching pennies to pay your developers, pay them out of your other revenue streams and sit on crypto to basically pick it up. So but you might make different decisions. The point isn't that that's the only way to think about it. The point is that you are now having to make very sophisticated treasury decisions that are based on a highly fluctuating asset. So you're going to want to start to introduce FP&A based on Monte Carlo simulations that include the chance that Ethereum goes to zero. Now, if Ethereum went to zero, I'm not sure any amount of FP&A would deal with that. Like, I'm not sure that would change my life at all. But it's still something for us to kind of like to kind of contemplate, which is what do we need to do as a business to balance the risk of currency exposure with our day-to-day cash requirement needs, and how do we sort of deal with that? And that's a lot of stuff that you're gonna have to kind of build internally or figure out internally from your side. The last thing I'll mention here, and then I'll open it up for crypto. I have a few more slides to share, but I'll open it up for Q&A for any questions anyone asks. The last piece here is, at level 3, you're going to see high transaction volume. At this point, if you do not have software that can handle 1 million transactions a month, you are going to be in a really, really tough position. So at these levels, you need to start thinking about how to do high volume digital assets and all that kind of stuff. So if you have any questions, there's a Q&A button. So if you open up your Zoom thing, there's a button that says Q&A. You can go in there and drop any questions right in there, and we'll get into it. So feel free to drop questions in now. We have about 7 minutes left. So I'm going to keep on rolling through here, but I wanted to make sure to open it for Q&A for anyone that wanted to do it. So here's how you got to level 2. I always say this first point is one of the most important parts, whether it's a center of excellence, a tiger team, whatever, it doesn't matter. But like the digital asset maturity model that we kind of dictate, it demands that you grow that tiger team level after level after level, that center of excellence, because the center of excellence goes from dealing with like, how do I account for crypto? It goes from dealing with the really simple stuff to dealing with really, really hard things, where now you have IT and your development and your engineering org all pulled together. So like, instead of letting these orgs kind of independently have their own siloed, best practice groups, whether that be best practice for wallet security, private key security, smart contract audit, bring that together, have your digital center, your digital asset center of excellence, have a tiger team that has people from tax, accounting, FP&A, finance, the engineering org, IT org, people who are passionate about crypto that all want to work together, have them all in the same room, have them be meeting on a bi-weekly basis, so that as you get to this point where now you have smart contracts, you have a forum to bring up this issue that of the risk exposure, where finance has a forum to bring up the issue of risk exposure to the engineering team, have an intelligent discussion, and then make hard choices based on that in terms of controls and things like that. So it's honestly one of the biggest things that you can do is have some sort of continuously meeting a group of people that cross across a lot of your different organizations that you can have these intelligent discussions around. By the way, this is a level 3 maturity here. That's a gaffe on my part. I apologize. Start understanding smart contracts better. So whatever it takes to make sure that your team understands smart contracts, being able to read an Etherscan page. I know that's a really silly thing to say, but being able to read an Etherscan page where like one single transaction has like 15 side effects becomes as important as reading a balance sheet to your finance team. So make sure everyone understands how smart contracts work at a high level, understands how to read a smart contract kind of page on Etherscan or in Bitwave or whatever it is, and everyone gets trained up on that. Spend time thinking and like learning about these new business models. Bitwave, we do a training where we'll come in and we'll send everyone a little bit of crypto. We'll show them how to go into a liquidity pool. We'll help them mint an NFT. Like there's this section where like maybe your engineers or product managers are super on the ball here, but everyone needs to be thinking about this. Like your finance team should be as on the ball as anyone else. If not in some cases, kind of more so, because you're the ones looking at the bottom line. You're the ones that can say, wow, if we switched our business model from being a fully self-hosted, marketplace like eBay to being all on chain, we could shut down $100 million worth of servers. We could get rid of 2% of our entire marketplace action of credit card fees. We could make a lot of money if we did that. Like that's almost ends up being like not everyone will think that way. And it's a great opportunity for finance and the back office to kind of bring more money. And then finally, a big part of this level is also you're going to start to see NFTs. So love them or hate them. You guys know my opinion. I'm a big fan of NFTs, even as they are kind of maturing in this world. But you are going to end up with NFTs on your books, whether you want it or not. It just is happening in a lot of different ways at this point. So you figure out how you're going to deal with NFTs. Bitwave, we have tooling. We have an NFT module for it. Even our mod, it's hard. Like NFT accounting for NFTs is hard. They're not priceable. They're infrequently traded. There's a lot of kind of open questions around how you deal with all that, but you're going to have to figure that out. So part of your journey to like level 3 maturity is making sure you have policies and processes around NFTs and all of that. I skipped through it real quick. All right, I know we have 3 minutes left here. Any other questions? Any questions from anyone on the? You want to throw in the Q&A there? All right. Okay. So the last thing here is kind of what happens after you kind of reach level 3. You're going to have your center of excellence. You will have people. You probably will have a few dedicated people, like hiring someone who's a real crypto hardcore enthusiast to be a full-time center of excellence person to do webinars within your company on a weekly basis. Is a really great step here. So you're going to want to look at how you can kind of hire talent to run the center of excellence. You're going to want to have processes and policies in place for private key tracking. There is no other option here. It might sound kind of weird because as individuals in crypto, the number one thing you hear is keep your private key safe, right? As an individual in crypto, someone on a webinar telling you to put their private key somewhere, please drop off that webinar. Please don't drop off my webinar, but please drop off that webinar if someone is trying to talk to you about your private keys. In the business world, it's different. You as an individual in the business, you don't own your private keys. The business does. The business has a fiduciary duty. And anytime you have fiduciary duty, that rolls up to the CFO arm. The business has a fiduciary duty to make sure that your private keys are backed up in a secure way so that if you get hit by a bus, you run away to Aruba, the business can take appropriate action. So at level 3, you have to have these kinds of processes. This piggybacks off the center of excellence because you have to be doing this in a cross-functional way. This can't just be finance sending out a memo. This has to be finance working with IT, working with the CIO to kind of set all this stuff up. You need to have smart contract. You as the finance team, you as the engineering team, you as the finance team have to have policies around smart contract source code management. And you probably have to be doing auditing. Like, I know that sounds ridiculous, but it's one of those things like you need to be going in and looking at who's checking in code to your smart contracts, what time of day are they doing it, what does it look like working with outside vendors to do audits of those smart contracts independent of your engineers. Be paranoid. So like this is the only thing you can kind of say here. You need to be paranoid. And then the whole company should be thinking about new revenue streams. Everyone in the company, from the PM to the receptionist of the office to the CEO, should be thinking about new revenue streams because there's just so much money to be made in this, and there's so much money to be saved through all of this as well. And then just sort of how you're going to handle the volume of data you're going to be getting and any new protocols you kind of have there. So that's it. If you want to learn more, bitwave.io, there is a button that says get the white paper, the digital asset maturity model. It goes into all of this in great depth. We're obviously passionate about it. I'm always happy to get on a call and talk to people about it because it's so much fun. I did get one question in the QA, which is how do I join Bitwave? If you go to bitwave.io, there's a button that says careers. Hit that button and we have a list of everything we're hiring for. We're basically hiring for everything at this point, from solutions roles with CPAs through engineers to product managers. So if you like crypto, if you like tax, accounting, if you like business or enterprise software, we would love to talk to you. So please reach out. Thank you so much, everybody. It's been an absolute pleasure. You are a great audience as always. Very excited for this to continue. This will be available to view through YouTube. So if you're excited and you want to watch it again, you just can't get enough of my ramblings, go and check out our YouTube page. All right. Thank you so much, everybody.